traders, so after all of that action yesterday, what can we expect today? Well, if you look at the daily chart, updated this trend line, so we've hit this trend line at the moment and we're in this little wedge which is actually a potential buying area. If you look at the price action that we've seen, so we've seen a lot of action around here. We only have one bar that's opened and closed under here, and that was on 23rd of March. So we're getting a little bit of a bounce here at the moment anyway, so what can we do? I would suggest that if you drill down, that's a 60-minute chart, let's just hit, it's not hit that support, it's penetrated through this support from last week's low, so it's gone under last week's low. At the moment we're sitting above it. Okay, so the next level of resistance is up there just over the 300 mark, 320. If we see it, of course. If you drill down to a smaller time frame, then I think you're looking at something like 133, 225. Of course, this is a very volatile market. So that is the Sunday range up there. So we pivoted around it for the first part of the week and then got to the middle of the week and slam, down we come. Alright, so you can see this 324 level is key. That was Tuesday's low. Monday's low. Alright, so in the meantime we are seeing a pickup here. We've had a buy signal on the 1 hour chart and we are recovering some. Alright, so just be aware of that, and in the meantime let's just see if we do get some sell signals on these areas here. The most 280, 300. In fact, I think we're going to change that zone. I'm going to up that zone to this area here. So anything from 225 to 330, 350 is a potential recovery area, and then if this is going to roll over and really slip into these lower levels, then that could be where it's going to come from. Okay, so at the moment the close last night was 24,024, and obviously we're 25-30 pips above that at the moment. So if this is bullish, watch to see if 24,000 holds. If we do pull back to there, otherwise look for sell signals, a continuation of this trend. So if this is a three-way push to the downside, and this is a 1, 2, 3-way push to the upside, then look for sell signals up at those levels. So my advice to you is to keep shorting until it stops working. Let's look at the DAX as well. DAX has already had a decent amount of shorting, so we couldn't get through, so we hit this lower fib zone, so the lower part of the mid zone, because there's the outer zone, sneaked in and then immediately closed lower and then fell out. Now the fact we didn't get to the 127 extension means that we are seeing some bargain hunters down here. So at the moment we have that sort of reversal pattern going on, but we have that little area of resistance above us. So we could still recover the 400, 450 area. Still, most likely area is 437 for the next level of short. 445 is the fade. Alright, so had a big drop, so it's understandable that we get some sort of push up here. And the case for the bulls is we've got a crossover in the 20 and 50-day average here, and so we come down to test the 20-day average on Tuesday. Got down as far, getting close to the 50-day average at 260. So if we do see some more selling, watch out for 200 and 260 area. If that fails, then we're going to roll over and potentially come down to 12,000 or lower. Alright, so let's just stick to the trend at the moment. I did short the Euro Yen today. That's the chart pattern I'm seeing. ECB tomorrow. So we've come right, so we've broken above the 200, we're sitting on it now. So obviously just managed to stay in on a little recovery. So I've got something like a 10 pip stop on this, and I'm currently just 20 odd 25 pips up at the moment. Okay, anything else? Not really. Euro is in this bottom of this little flag pattern. Currently seeing a lot of selling, as we just in the last 5 minutes just seeing a 10-20 pip drop, and looks if that's sort of pushing lower. That's going to help the DAX push higher. So this is one of the reasons why the DAX has been jittery, apart from the obvious bond issue. So I mean, from my way of thinking, this is all about the bonds. This is the US 20-year note. Let me put that back to 1 hour before I forget. These bonds are vital to the health of the economy. So if they are going to continue to drop, this would continue to put fear into the markets. You need a healthy bond market to sustain expansion in the economy. Otherwise, rates go up and it squeezes money circulation, money supply, and you could potentially go into recession. Alright, so watch out to see if we can get another leg down in these indices. These indices have got a habit of pushing higher. I think Twitter have just put in some good results pre-open, so we're seeing a little bit of a squirt higher as that sort of feeds into the market. Okay, bye for now.